U.S. economy shows continued signs of recovery like we saw in today's GDP numbers, there's reason to be excited about investing in industrial stocks. That's according to Morgan Stanley analyst Scott Davis. Scott covers industrials for the firm, and he's been ranked as one of the top analysts in the field by Institutional Investor. And he joins us now. Welcome to the program, Scott.
Thank you, Scarlet.
Now, industrials, we know, were expected to benefit from the raft of government stimulus, not just here in the U.S., but around the world. How much of the upside have we already seen for these companies then?
Very little, really. It's all, we think it'll be mostly the back half of 2010. Now, clearly the stocks are starting to respond now in anticipation of that, but we think we have 2 or 3 great years in front of us as it relates to government stimulation, not just stimulation, but also increased regulation. Increased regulation tends to help industrial companies.
Why is that?
Well, oftentimes it can be something as simple as air conditioning. Like right now, there's a law in effect that mandates a higher-end air conditioning gas, which is forcing many people to get new air conditioning systems. So if you have an air conditioning sales guy come out to your house, he may recommend that you rip out your entire air conditioning system because the new systems are more environmentally friendly, and that's all government regulation.
So there's one sector that's definitely lobbying for more regulation, I guess.
Absolutely, yeah.
Okay, we've been looking at earnings of industrials, at least in the first quarter, and they're not as robust as some of the other cyclical industries that are linked to the economy, like technology.
Right.
When will we start to see that catch up?
Well, industrial earnings are great compared to our expectations. I mean, it's been a fantastic quarter compared to really consensus expectations. It does tend to lag technology and lag consumer by about 2 to 3 quarters. So we think by the time we get to the back half of 2010, our earnings growth will exceed that of what you get out of technology and consumer, and this group will continue to outperform over that time period.
Where in the industrial space do you see the most room for improvement?
Well, I mean, right now you're seeing strength in early cycle stuff. So auto, housing, anything related to government spend. I mean, things like that are coming back against very easy comps. What you haven't seen yet is utility spend, commercial construction, really late cycle, even aerospace is just very late cycle stuff. That hasn't come yet. It will. The timing is still a debate, but we would expect that starting this summer, you'll see improvement in aerospace, and then after that, in 2011, you'll see improvement in power generation utility, and then 2012, you'll see an improvement in commercial construction. So as you get later along in the cycle, the later cycle stocks tend to become more interesting.
Okay. Now, one thing I noticed in your note, you were talking about labor relations, how they've been getting better in the industrial space. Have you seen more of a partnership there between corporate management and unions?
Absolutely. I mean, what's just fascinating as a longtime industrial analyst is that we've never seen anything like this before. I mean, labor and management actually are working together to cut costs and become more profitable and more productive. And what's happened really is this last downturn, the unions allowed employees to be furloughed, and often many of them still collecting health benefits, which really helps them, versus in past cycles just outright being laid off without health benefits. And so we've seen a partnership there, and it's really helping.
I'm sorry to have cut you off.
No,
Give us your top picks for the industrial space for the rest of the year.
Sure. Well, right now there's 3 stocks we favor: Danaher, 3M, and Honeywell, and no particular order. We really like them all 3.
Very different companies.
Yeah, very different companies, very different, and geared to different parts of the cycle, so there's not necessarily a big theme there. Danaher, which is a Morgan Stanley best idea, is arguably the best company most people have never heard of. It's very well run, benefits from an improvement in M&A markets and some of these early cycle businesses.
Great. Thank you so much. Thank you for your time. I've been speaking with Scott Davis, an analyst over at Morgan Stanley.